Hello, everyone. Today, once again, we'll take a look at the American market, review a few instruments, and highlight the key points that I hope will help you make your trading decisions. Let's get started. And we'll begin with the S&P 500 and its monthly chart. So far, everything is going according to the plan we set in advance. The price continues to accelerate the trend, the levels, the target as $7,500, and my chart expectations remain unchanged. I think the price will encounter resistance at that level, after which I expect a possible consolidation around this area. Next, a test of strength, and only after that, a resumption of the upward movement. The volumes are also indicating the same thing for now. Now, let's move on to the daily chart. Here, I was concerned by the presence of a price gap, which the price usually likes to fill, but that doesn't necessarily have to happen after reaching the initial target. It's possible that a return to these levels will occur after the asset reaches its global target. So it's too early to talk about this right now. In the future, we'll assess its behavior and momentum. So, for those who are holding shares in their portfolio, keep holding. Yes, the price is at a certain level, but it's possible there won't be any correction at all, and the price just won't notice anything and will continue to rise. We need to watch the efforts and the reaction of sellers at the current level. Next up are Google shares. On the monthly chart, the price continues its ascent. Levels, trends, targets all remain in effect. Nothing new has happened on the chart, so let's switch to the daily chart and see what happened there. On the daily chart, in the previous review, I said that I expected a breakout of the level after a slight correction with a minimum target of $400. I was expecting a reaction at the previous high, but the price shot up with a gap and the target was reached. Again, the price gap needs to be filled, so I think it's quite likely that once the target is reached, the price will start a correction, aiming to test the previous effort, and with this move, it will fill the missing gap. That's why I think it's necessary to add another graphical expectation. When the move to fill this gap will start is still unclear. It could start either after reaching the first target or after reaching the global target. In any case, this is something to keep in mind. I also thought that a correction could start from the important round level of $400. But at the moment, the reaction to this level is insignificant and the selling volumes are minimal. So for those who are holding shares in their portfolio, keep holding until there is a significant reaction from sellers. The key level for a trend reversal is the price around $382 to $385. If the price drops below this level, then we can assume that a correction has started. I do not recommend buying more shares at these levels. Next up are Apple shares and their monthly chart. Here, the trends and levels remain relevant. In the previous review, I said that the most likely scenario was for the price to break through the upper level and move toward the target of $325. And indeed, the price broke through the level. But I would like to note that, for now, the buying volume is not sufficient for further movement. However, since there is no selling pressure, I am keeping my targets and chart expectations unchanged. Next, let's turn to the daily chart. Here, the price continues its ascent without any visible resistance. I think the nearest target for this growth will be the level around $305. After that, I will watch and wait for a reaction from sellers, which will lead to a correction and most likely a subsequent test of this move. Therefore, for those who hold shares in their portfolio, I don't see any visible reasons to worry. Well, that's roughly how I expect things to play out. And if you think differently, let me know in the comments. And don't forget to like and subscribe to the channel so you don't miss future reviews. I hope this was very helpful. And don't forget, we make assumptions, but the market decides.